The other story of the day is clearly Snap. It's going public today. It has not yet traded publicly today. They're working on the price. At what price should it go out to you and I? At the moment, it looks like around $24 a share. The offering price, which the insiders have gotten, is $17. Odds are that it goes out today, shortly, around $24 per share. What do you say to that, Peter Kernan?
It's game day. I have to say, looking at that screen, I have been right there in that position. It's very exciting when you try and pull a book together. You do have a lot of people who bought, and some of the people who bought at 17 are what I would describe as unusual buyers. We've had a lot of competing pockets of demand, including perhaps some sovereign wealth funds, some funds outside the United States to say, I'm so excited about the tech market in the U.S., I'll buy and I'll agree to lock up for a whole year. I won't sell for a whole year. That's interesting. What frustrates me a little bit is that they left retail with very little stock to buy.
That's right.
And so they're going to have to come into the aftermarket, and that's going to take this from 24 where it opens to a much higher number.
Yeah, so there'll be a pop because of the very limited supply of shares available and very strong demand. So supply is limited, demand is strong, up goes the price, but it's a pop, and you don't think it'll last?
I don't think it'll last. Frankly, I think this company at $17 a share, you really need to see in a couple of years $1 billion of earnings for that to be plausible. I can live with $24 billion. I guess it's almost priced to perfection. But if it goes to $25 a share, you're talking about a $34-35 billion valuation. If it goes to 30, you're talking about a $40 billion valuation. My advice to people, I love working with the people who watch the show, do not buy this stock, don't chase it. 80% of the stocks, the big ones that have gone public, have traded below the IPO price in the following year. Give yourself some time, don't chase it. This is not worth $40 billion.
You've been there. So why don't you explain what those people on the left-hand side of the screen, they're at the New York Stock Exchange post for Snap. What are they doing?
What they're really trying to do is build a book of business. They had to have a price that would involve and engage all these various pockets of demand. The big institutions have gotten in at 17, but most of them didn't get everything they wanted. A few did, but there's a built-in frustration. So they know if you're going to float a deal out there, what's going to happen with this upward price is it's going to push the stock very high. And so what they're trying to do is find a place where supply and demand can meet, where you can float it. And there's a lot of back and forth between here's what I want to buy, here's where I want to buy it, and they're honing in. And they started at 22 this morning, too low. They're at 24, 24.50. That feels like it where it may come, and you're trying to build so that you don't have the thing trade instantly to $40.
Okay.
And so basically what I'm going to tell you is this is it's actually from the floor, but yeah, I won't take it. But I will say this, there is a process that's going on to try and make it orderly, and once they've floated it, there's no more order, because once people start coming in and they don't buy at a price, they buy at the market and say, get me Snap wherever I can. That's what I'm asking the people who are watching. Don't buy it wherever you can. Have some discipline. You'll have a chance. These things almost always come around.
Is it computerized? I mean, are they organizing their book, demand versus supply and price? Is that all being done by computer? Or is it a couple of people behind that counter who's saying, I got this, I got that, I'm bringing it together?
Yeah, in the old days it was that I got this, I got that. Now it's intensely computerized, because remember, they're reflecting demand pockets all over the world. So there are people in Europe who want to buy. There are people in Asia who want to buy. Those orders are being reflected to them. And they also want to get a sense of how much demand is there afterwards. In other words, let's suppose I come in for 1,000 and you get filled on the 1,000. Are you likely to buy 1,000 more? So you get a pattern of demand. And once you understand that, you can hone in on a price. But this is intensely computerized. It's global. It's all over the world. All eyes in the market are watching that group right there. It's really exciting to be there, because you're talking about a flood of data into a few people's hands, and they have to come up with a reasonable price to start this out.
You've been there.
I have been right there. It's actually the most fun thing there is. So game day is the most fun thing
If it goes your way, if it gets really screwed up, it's not fun.
Well, you think about Facebook as an example. That's a stock that did not hold its price, its IPO price, for 24 hours. The next day it traded, and it traded down and down and down. And so a few months later, it was traded at, I think it priced it at 38, and a month later it was at 24. It went down to 15 bucks, 17 bucks. Barron's wrote an article saying it's going to 15. And that was like the kiss of death. From 15, it's gone to 138. It's gone up just hugely. But these things almost always come around, and that's why patience is a virtue. Don't get caught. Whoever said casino to right, don't be the one who buys it at $40 billion in value. Don't be that person.